Tariq Pensy, ex-Chief Investment Officer in BlackRock for Sustainable Investments. Thank you very much for joining us today.
Thanks for having me.
So together with me here is my partner, Vשירה, Miikין, who is a columnist for Haaretz and the Market that writes mostly about climate change and environmental issues. So before we start, Tariq, can you briefly tell us your story? How did you end up being an executive at the world's largest financial asset company?
It's actually because I first left the industry and got drawn back in. So I began my career as an investment banker and then spent a long time in private equity investing and generally investing and building investment strategies. Was never really my passion. My passion was more around international development. And so in 2013, I created a digital nonprofit called Rumi that would bring free learning to the 6.5 billion smartphones around the world. And it succeeded and grew and became a business school case study. And that put me on the radar of the financial services industry to be a good person to work on sustainable investing, working on purpose and impact at a 501c3 charitable organization that I founded. I was tasked to become the first ever chief investment officer for sustainable investing at BlackRock, the world's largest asset manager.
Can you please tell us a bit about the ESG? What is an ESG? Who invented it? And what was their purpose?
ESG means, first of all, many things to many people. But in general, the acronym ESG, or environmental and social governance, is generally thought to be a toolkit, right? Or a way to approach investing where you can take all the traditional investment processes that already exist and that we're aware of, which are meant to extract profit, right? That's the core of capitalism, and that's where managers have a legal duty, right? To focus, you're using someone else's money, as you have to focus on value measured in dollars. And the idea is that if you incorporate these ESG or environmental, social, and governance considerations and data and insights into your investment process, you can sort of achieve a win-win, right? Where you both are a better investor because you're better prepared for ESG related risks and opportunities, right? Because it's a new data set that society cares more about. It influences how the economy operates, how consumers operate. But then also in doing so, you can effectively then start tilting capital towards more responsible activities, right? And in the aggregate, that the idea is that that has real world social impact and almost sort of uses the gears of capitalism to fix itself.
For me, as someone who writes, researches, and teaches political economy of regulation, in many cases, ESG, like CSR, corporate social responsibility, is one of the strategies that corporations use to stymie, delay, and influence or dilute laws and regulation that they fear or they don't like. It's in many cases, it's like making sure that you control the narrative in the discussions on limiting the power on behavior of big business. So when you joined BlackRock, how did you see ESG and how do you see it today?
So when I joined, I had, of course, drank the Kool-Aid, which is why I joined. And I thought, this is an opportunity, a very unique opportunity, frankly, to drive this forward at, the biggest asset manager in history, the biggest pool of assets available in capitalism. And so it was a real opportunity to say, look, if we do this correctly, the kind of impact we can have across, $10 trillion would be enormous. And in doing so, create a model for the rest of the industry to follow. So the idea for me was that actually this works and we can do something meaningful that creates impact and is good for, commercially and for investing. In reality, what I found is that it's largely a marketing narrative, right? I mean, I had a chief investment officer title, and I have an investment background. I've been a fiduciary and invested billions of dollars at different firms and different asset classes. This was not an investing role. This was a marketing role. And at the center of it was what I would say this argument that it's in the interests of big business to do the right things. And that's the argument that they keep making. And in some of the pieces I've written, including a paper called The Secret Diary of a Sustainable Investor that went viral, I make the argument that this is like capitalism is like sports, right? Competitive markets are like competitive sports. They all have rules and referees, right? In the case of capitalism, there are, of course, there's no such thing as a free market. All markets have rules, and if you change those rules, you get different outcomes. all of which can be considered market outcomes. And the argument big business is making is that at a point in time when the sport has gotten dirty, right, and the fans and the public are saying, listen, there are too many companies that are doing things that are not in anyone's interest, whether it's addicting us to apps that hurt the mental health of young people, whether it's polluting, right, whether it's destroying biodiversity. There's too many communities. The public is saying we need to change this. And business's answer is effectively that you can rely on good sportsmanship and self-refereeing, right? And that's really the central argument that they make is an idea called stakeholder capitalism, which is this idea that like it is in the interest of businesses to now look at all stakeholders, which is, I found to be kind of nonsensical in practice because first of all, legally, most companies are based in Delaware, right, in the US certainly, and they're all subject to legal obligations to focus on profits. And none of that has changed because business leaders put out a PR statement saying like, we care about all stakeholders, which the players in the field saying, hey, we care about good sportsmanship. And it struck me that it was delaying the kinds of reforms that we need as a society, because the longer that you have businesses, I think, incorrectly arguing that, self-refereeing is the answer and buttressing that argument with a claim that we can rely on them to do that because it's in their own interests, right? Like this is the argument. Why would we trust you to play clean if you've been playing dirty for 20 years? And that's the problem we have. Well, the answer for business is say, no, don't worry. Like this is now in our interest to do this, right? You can rely on business to do the right thing because, we make more money if we protect the climate. The reality of the incentives of the industry today are that CEO pay is the highest it's been in decades, right? It's 320 times the average industry worker. CEO tenure is the shortest it's been in decades, right? It's 5 years. And you have a system where the people top get paid a lot of money and they work less time there because frankly, they're making a lot. And when the system has such short-term incentives, which is something that even BlackRock agrees with, because BlackRock's CEO, my old boss, Larry Fink, is one of the founding members of the initiative focusing on capital for the long term. When it's that short-term oriented, you cannot rely on them to do what's in the public interest, because the reality, what I saw, is that their incentives are to exploit the system as much as possible, right? Because that aligns with their short-term incentives, and effectively to market themselves as doing, the right thing. It's most of what I saw in ESG and stakeholder capitalism was just marketing. It was marketing and PR. And unfortunately, it looks really cynical when you zoom out and you look at the system, because effectively what business leaders are doing is holding off regulation, right, with one hand, right? And they do that through marketing to the world that like, who needs referees, right? You can rely on athletes to, players to do the right thing all by themselves. And in the US, they're paying referees not to do anything, right? So Netflix, Boeing, Disney, and BlackRock are 4 companies that all eagerly put out ESG stuff around, whatever they feel like reporting. It's all voluntary and, often non-standardized. That is, goes to the PR and marketing team to say, here's the nice things we're doing for the world. And all at the same time, all 4 of those companies have fought off shareholder resolutions, ask their own shareholders, asking them to disclose their political spending, which, as we know, post Citizens United in 2010 is effectively traceless and limitless. And I think fundamentally they're holding off taxes and regulations, which is actually in their short-term interest to market themselves as being green rather than to make the expensive long-term investments to actually be green, which maybe take 10 or 20 years. And then societal angst is growing, right? People are saying we need to know more about the environment, right? And everyone reads the IPCC report from the UN and other things. They look at inequality. And business leaders are meeting this demand for, the growing social angst by selling a bunch of unregulated green products that I saw from the inside pretty much just, for the most part, move money around. They're marketing promises that are non-binding. There are products with higher fees, but that don't really create any real-world impact. But in fact, it doesn't change anything. And my concern is that that endangers the planet and the political foundations of capitalism, because young people are in particular losing out from this. And you see the data that the Gen Z and millennials are the 2 generations alive now that no longer believe in capitalism.
We're at least a decade into the ESG fad. It's like the latest buzzword. And can we measure any kind of impact? Is there anything positive about this market? And also, your critique is only on ESG investing or other kinds of market solutions, impact, green venture capital, etc.
So it's good questions. I mean, first of all, I'd be interested to know, actually, I use sports analogies. I use basketball in my long paper, The Secret Diary of a Sustainable Investor. I'm actually a soccer fan, but I felt like this message, I'm a Canadian who's lived in the US and the UK and other places. And I thought, there's two questions there. First of all, is this, is it redeemable, right? Is there anything good about this space? And there is, right? And I would separate two sets of things. First, you have a bunch of tools that help you, they're being built that help us measure our carbon footprints and emissions intensity, a whole bunch of other things. Measure the E and the S in particular. Again, I don't think the public cares about the G, like the corporate governance of a private company is important to the shareholders, but the public is really focused on the E and the S, right? And at a particular time that since the 80s, governments have, I would argue, have been insufficiently aggressive in using their powers to protect the public interest. There's this growing angst. So the tools are interesting in that capacity because you can better measure, what's going on. So some of them are useful. The data can be useful. It's problematic, but it's, it can improve. I think that, the standards, right, are helpful, right? Because at least people report then in a standardized way, just like accounting. You can't compare things unless it's reasonably standard or apples to apples. And I think finally the people, the best thing I've seen are the people. You have this whole growing group of largely young people that are very passionate about building capitalism in a way that's sustainable and more circular. So those are all good ingredients. The problem is they're being combined into two sets of things that I think are dangerous: products and narratives. The products, because there is no regulation around what's going on, they often just imply that they're creating real world impact, or the idea of additionality in the impact space, like by doing this thing, buying this fund, whatever, am I creating some additional value to the world? Most of them don't create any impact, right? ESG products are believed, I think, by the public who buy them and pay more in fees to do something to address these issues. And in fact, the vast majority of them are just moving around publicly traded shares that are already in public markets. And, because they realize in some sense that if you're buying an ETF, right, a basket of stocks attached to an index, there's a bunch of nice people out there who are probably young and who care about these issues, and they'll pay premium fees to get the ESG version of it. And so I just basically say, Shira, you look like a socially responsible person. You're young, you like green stuff. So I give you a basket of slightly more green shares and I charge you more for it. And then I go, the brown shares or the non-green stuff that you didn't own, like a hedge fund, like the one I learned to invest in, happily buys it, right? The market still clears. I mean, the market doesn't work if people are leaving money on the table, right? So if a fundamentally business model is profitable and does things that harm the public interest, that is by definition, I would argue, a place where political philosophy 101, I mean, it should be regulated. So the challenge is these products promise things that they can't do. And I think that's often unethical and dishonest, but it's, a way of getting consumers to pay more in the same way that if you have a detergent on the shelf and then company figures out they can do a green version of it and charge $1 more, I think it's frankly immoral, because why would anyway you be solving a systemic problem by putting the burden on certain people to solve it, particularly young people? But the dumber thing about it is that no one actually regulates whether or not the thing is actually green. And so what I've seen in the industry is a race to the bottom, where it's kind of like grocery stores 30 years ago, where if everyone starts talking about buying organic stuff, if you could just, anyone could put a sticker saying organic on your apple, right? I mean, and no one's going to police that, then there's a race to the bottom where everyone wants to say it because, you'll sell more and no one's going to put you to any standard. So the tools are misleading. Sorry, the products are one set of problems that's misleading. The second thing are the narratives. The narratives are at their core free market self-corrects theories by another name. And what's ludicrous is that no one calls it that. The biggest problems with this today, people seem to think that disclosure alone will be the solution. So they say, okay, we just need to get companies to disclose their carbon footprint, right? I mean, obviously that's necessary. It's obviously also not sufficient because we have a market failure, right? So if you use a sports analogy, if you just ask all the companies to disclose their pollution levels, but you don't actually do anything to tax or if we spend 5 years doing that, but no one's talking about internalizing the externality, it would be like if we had a soccer game and there was, the answer was that we have VAR and video assisted referees so that we can now see the game in slow motion and see who's doing dirty tackles and playing, in a bad way. I mean, that's nice, but you still need a referee to give out a red card, right? And I think that's the fundamental other problem is that, the narratives around it seem intended to convince people that you don't need to regulate them. And I only went public and made this argument as it was a bit of a daunting thing to do it as an ex-insider against the largest firm in history. But I only did it when I, as I wrote in the Secret Diary paper, when I concluded working with a study with the University in Toronto, that the messages around sustainable investing were misleading the public and delaying regulation. And I originally had told friends, I said, look, all this ESG sustainable investing stuff kind of felt like giving wheatgrass juice to a cancer patient, right? Like the cancer spreading, that's the climate change, it's slow, but it's spreading throughout the body. And we were, responding with a well-marketed green, sort of idea that there's no reason to believe has any impact whatsoever, wheatgrass juice. At some point, you're just delaying chemotherapy. And I think that there is inherently a value transfer in that people don't acknowledge. Because number one, I don't care about the whole, do you believe the science nonsense? If you have an iPhone, you believe the science, right? I mean, that's pretty much comes down to for me. So the real question is, we're amplifying the cost by delaying it, or we're also transferring them to the youngest people in the world, right? Often the poorest people in the world. And that's a fundamental challenge that I think needs to be subject to debate in a democracy.
Let's talk about, financial markets and pensions and asset management. So correct me if I'm wrong, as long as most of the world's population or a big chunk of the world's population's pension is based on defined contribution pensions, meaning the return of pensions influence directly or tie directly to the amount of money we get. The idea of waiting for market forces to solve societal problems is strange. If green or ESG assets will underperform, eventually they will have a marginal share in capital markets, and therefore they will have marginal impact. And perhaps the whole premise of letting market forces solve our societal problems, especially when we're talking about pension funds, is fundamentally wrong.
I think that's 100% right. I mean, look, there's this idea that ethical investors can do the right thing and then the market will solve itself. I think it's not nonsensical. Like the idea of divestment, right? Like if I sell the shares of this fossil fuel company, it's going to achieve something in the world. There's a fundamental misunderstanding there between boycott and divestment, right? If you boycott something, then you're going to lower the revenues of the company. And if they have high fixed costs, that could be a huge problem for them. You not owning the shares of the company maybe doesn't mean anything, right? Because they don't need everyone in the market to own their shares. And there's literally zero evidence that reduces emissions. I call divestment cancel culture meets financial markets, right? It's just a cover your ass thing to say, I'm not going to take part in it. Like I've met Middle Eastern investors that don't want to own alcohol. Like they just don't want to be taking part in it. And I think for climate, we can't just wash our hands of it, right? And reduce our emissions on paper. We need to reduce real world emissions. And divestment doesn't do that. And any idea that is based on ethical investors doing the right thing is just, I think it's completely idiotic, because I worked at a distressed fund. We would happily buy anything that was legal and made money. And if there's no one doing that in the market system doesn't work. Someone's going to create a fund to do it, right? And that's right. So what we're seeing now, even for dirty assets, is fossil fuel companies that are publicly traded in the West. They feel a bit of pressure. They sell it to some private equity fund or to someone who cares less. It still operates in the economy. I think fundamentally, if you want, less, we have the powers of taxes and regulation, right, to affect externalities. And we've known that since 100 years with Arthur Pigou, and 4 years ago, a guy won the Nobel Prize in economics for saying we should apply it to pollution, right, and emissions. I think as long as people can make money doing things that are not in the public interest, they'll keep doing it. And that's the fundamental challenge, right, is that ethical investors can step aside, but someone's going to fill that void. And, if you don't want something to happen in society, make it illegal. No money will flow there. Sure, they'd happily do it. It's probably a good high cash flow business. If you want something to happen more, you could figure out how to create more incentives towards it, right? subsidies, whatever. If you want to happen less, there's taxes and other tools. Until we use those tools, the system is going to keep sending more capital to things that don't serve the public interest than we want.
So you keep pointing into lawmakers and regulators for the solution for the climate crisis, or at least trying to do something. But for example, what's happening today with Democrat Senator Joe Manchin, who killed Joe Biden's climate agenda. So how can government make a difference when they can't even, just pass the laws, the bill?
I think politicians right now don't have an incentive to do anything because they have they're just trying to get reelected. So it's hard to run on a platform that like, I'm going to add a, tax that's going to make gas even more expensive at the pump. It's like impossible, right, to do. So that's why I've turned my attention to the business community, right? Because everybody has short-term incentives, right? The politicians, trying to get reelected, and business leaders have short-term incentives in the next few years. There's a big difference between them, however. It's that the politicians are begging for money and the business people have the money. And so somebody needs to have a conversation that's honest about what we need to do. There are a lot of business, like I heard an anecdote from a friend that Jamie Dimon at JP Morgan Chase in a meeting with him, and Dimon says, hey, like we all know that it's a carbon tax, right? Like that's what we need. But it's really hard to get that politically done. So I guess we can't do it. So here's the SG. And my friend's sitting there thinking to himself, why the hell don't you go out and say that publicly? They said, we need a carbon tax. Like we're going to need regulation. That's what our experts are telling us. The epidemiologists told us to do inconvenient things, closing the schools, closing the, bars and restaurants. Well, economists are telling us how to flatten another systemic curve that science is telling us is dangerous. It's in emissions, right? And they're telling us it's a price on carbon, vehicle emissions limits, right? Energy efficiency standards on buildings, things that have probably cost businesses money in the near term, but benefit society in the long term. They won't do it on their own if there's no business case because there's a market failure, and they'll keep kind of doing similar to what they were doing. I mean, there's a bit of progress, but obviously there couldn't be zero progress. The question is it sufficient progress? It's clearly not. So I think ultimately, I think there needs to be debate in the business community. And I think young people in the business community are going to have to lead that debate, because I don't know how else do you hold these firms accountable unless their own younger employees say, wait a second, like we are making the least, right? Whereas CEOs making the most, they're making the least, and they're the most at risk of the consequences of inaction. So, arguably there's a value transfer going on between, CEOs today and their most junior and their youngest employees. And I think unless we highlight that, I don't know that you're going to get accountability. And I think the political system needs to be the one that does it, but I don't believe that that's going to be possible until the business community has an honest conversation and says, look, we're going to need regulation. And at that point, politicians, it starts to become more politically palatable for them to tell the public. Our business leaders are telling us we need to make sacrifices to solve this problem, just like we did with COVID.
You mentioned the narrative of the market will solve our societal problems. There is another very dominant narrative, especially by Silicon Valley, but not only Silicon Valley. Many people now believe that it's technology will save us from climate change and solve many other societal problems. And we need, at the end of the day, what's going to matter is strong action by lawmakers and governments.
I think it'll probably be a combination of all of these things, right? So the first thing I'd say is, as a finance person, when people make the argument around innovation, I think it's, of course, we're going to need innovation, but the extent to which you rely on innovation as this thing that'll come and save us, but sort of on its own, the more I think we have to acknowledge there's a bit of privilege around that debate, right? Like Larry Fink, my old boss, CEO of BlackRock, is turning 70, right? For him to say we should rely on innovation is arguably unfair to the 22-year-old employee, because she at BlackRock, she has much lower risk tolerance, because frankly she's going to end up eating the consequences, right? So the question is, yes, we need innovation, but how much are we willing to rely on that as a sort of magical unicorn that'll come, and what are we doing to achieve that? So I'll give you a simple example, right? The pandemic was playbook of the pandemic, and you apply it to climate change, right? With the pandemic, what did governments do? They said we have to flatten the curve. That required them dispensing of the neoliberal fantasy that the market will magically correct and that you can just leave everything open. They quickly used their powers to close things en masse, close borders, make mask mandatory, and that allowed flattening the curve, right? And while they're flattening the curve of infections, they quickly found an escape plan through Operation Warp Speed, right? Which was the US government plan to galvanize the private sector to create the vaccines we need. Now, let's be clear, I'm a capitalist. So of course, I believe the private sector needs to be, the key, and so does the financial markets. But the question is how that comes about. In that case, they knew that we have to fund direct R&D spending to companies, right? To make sure that, they can innovate. The US government did like close to 1 billion vaccine pre-orders, which is, multiple times the population. And the idea being that you don't want one or two of them doing it and the other one saying, oh, we're not going to make it. Like you need 5 or 6 horses rushing to the finish line because we need a vaccine quickly. You could apply that same model today to climate change, right? Flatten the curve with one hand. This would be like, price on carbon, all these regulatory things to move from voluntary compliance around like, please, lower your emissions to mandatory compliance, right? Which is what all the theory tells us. And while holding down the curve, they could do an Operation Warp Speed for innovation, right? For climate, right? And so, more funding on base research, finding ways to galvanize and catalyze the private sector to do more. Because I think there's no question, there's no shortage of people who want to find solutions. Young people have great ideas, technology, and so on, but it's not moving fast enough. And as long as the market failure persists, there's no guarantee that the incentives today are to do enough of what we need there. I think that is something that, requires governments to go in and actually catalyze the private sector so we move faster and so we don't put all our stock in this magical sort of unicorn that innovation will come around the corner and save us, because right now it's a pretty high risk to take when we only have one planet and we're kind of running it into a wall.
What about individualized actions like, recycling and cutting your own flights? Do you have anything to say about most young people I know, they concentrate on that arena?
Yeah, it's true. I don't want to say that that's a bad thing, because obviously it's not, it's good. People should do what they can. But my concern is that there's no way people should do that and view that as a solution. Because that would be like saying, oh, we need to flatten the COVID curve, so I'm going to wear a mask because I'm a responsible person. And it's like, yes, but flattening the curve is going to require, it's a systemic crisis. We need everybody to do the right thing because we're going to be defined by the speed of laggards, not the leaders. And so in that context, like, yes, we should all wear masks. And yes, we also need a mask mandate to make sure everybody wears masks. Same thing here, right? Be responsible, watch your own activities, but, it's the old Ronald Reagan thing, right? Trust but verify. Right. So let's make sure we also have the mask mandate version, which is a systemic reform that applies to everyone. Because otherwise, young people going and killing themselves to cycle to work and lower their footprint while, oil and gas companies are getting away for decades with like lobbying to keep loopholes open. It's ridiculous. It's so patently unfair that it's destroying the faith of young people in capitalism. And that again, we're not just endangering the planet, we're endangering the political foundations of the system.
All right, Tariq, 2 last questions. First, Shira's last question, and then I will conclude.
I would love to hear your opinion about large fossil fuel companies like ExxonMobil, merchants of doubt, you just mentioned them. Do you think their efforts can still make any kind of crucial change? Because we don't have a lot of time, or they will always stonewall us?
I don't think that those companies are inherently evil, right? So there's a view that like, on the right, that these are great companies and how dare anyone interfere and, badmouth them. And then on the left, they're just incorrigible, right? They're evil and we must never touch them. The reality is somewhere in between, right? Generally speaking, I think they're energy companies. And I think that they're probably best placed to transition and lead a green transition. The problem is their incentives don't lead there yet today, right? So, you can't rely on tobacco companies to do the right thing once you figure out smoking causes cancer, right? They're not going to voluntarily sell less cigarettes. We need to regulate them in the 50s. I think we can do the same thing with these companies and speed their transition, right? To actually doing more in green, which they're doing. The problem is they're doing it far too slowly because, like smoking companies, when they figure out that they can slow regulation, they'll keep open a very lucrative profit model. So I think that those companies are going to have to transition. They're not, they're not going to necessarily go extinct, but the question is how they do it and how fast. And I think in the public interest, it's important that governments give them a nice gentle nudge.
Last question, what signs of optimism do you see in politics or in markets or in the discourse that you can offer us before we end this conversation?
I kind of am optimistic. I think the most interesting thing I've seen and why I started making these public arguments is because of how business leaders reacted to the pandemic, right? So they were saying, oh, we have this slow moving systemic curve that science tells us we got to flatten emissions, and they're out there floating a bunch of free market self-corrects theories, which is what ESG is. I mean, a lot of nice words and that, yeah, but otherwise it's effectively the market will correct itself if you just have more data and you have these more funds and all. Again, none of it made sense in practice. But I think what's so fascinating is that they were all forced to show their hand when the pandemic hit, because suddenly there was a really fast-moving systemic curve we had to flatten, and every single one of them, including the Business Roundtable, right, the body that said, "Oh, stakeholder capitalism was the answer." Suddenly, they all said, "Oh, we need governments to come in." And what's fascinating is that you notice that when the incubation period of the scientific threat is decades, right, emissions slowly building, they're kind of like, oh, the free market will deal with that, right? But when the incubation period is a few weeks, that aligns with their short-term incentives, right? They couldn't just lie about it because within like a few months, the hospitals will be overflowing, and so they realize we need government action to flatten that curve. If you notice the debate that's going on around ESG and all, none of the leaders have any answer to that argument. Like zero of them. Like what I've seen firsthand is that their goal, they're ducking the fight. It comes to the disadvantage of their own younger employees. And I think the more we shine light on that, the more we have a debate, and they don't have an answer, right? They're pushing a double standard that conveniently aligns with their interests, which are, again, to preserve the status quo. Because if you benefit the most from the system and you're the least at risk of the consequences of inaction, you're going to act exactly as we'd expect to act according to their incentives.
Tariq, Pנסי, thank you very much for taking the time and joining us today.
My pleasure. Thanks for having me.